Hello and welcome to Charting the Markets. It's Monday the 6th of February, and by and large we're looking at markets that are trading towards the downside. People calling for this to be a potential market top. Bear in mind that recent optimism around the potential for central banks to move into their so-called terminal rates and soon start planning for them to reverse interest rates, that may have gone a little bit too far. Last week, we did see central banks essentially pointing by and large towards needing to see further upside in terms of rates. But, we are certainly approaching that terminal rate. But the big mover last week came on Friday, where we saw that massive non-farm payrolls figure, big outperformance on a payrolls figure. Different ways to look at it. You could say, well, this is a great thing for the US economy. It shows that we're probably not going to see a massive recession. We're probably going to see a soft landing and the like. So US dollar strength from a US economy standpoint. We've also seen some dollar strength around the idea that, well, if we're not necessarily going to see any sort of harsh landing in any way, where is the spark needed for the Federal Reserve to start reversing monetary policy? Instead, we could see higher interest rates and we could see higher for longer. They may have to maintain it for an extended period of time. That's not necessarily the case everywhere, and certainly the UK, I think, appears to be a potential outlier. We have been seeing pound weakness around the idea that, well, if the UK's economy is going to flag so heavily compared to other regions, the IMF certainly pointed that out recently, then maybe the Bank of England is going to have to act first and start to reverse course and move interest rates lower. The caveat to that is, well, UK inflation is still in double digits. So we're nowhere near a point where the central banks or the Bank of England should really be in a position that they feel comfortable reversing interest rates quite yet. In terms of what's happening today, by and large, it's a relatively soft start to the week. We've seen a couple of data points coming out. We've seen German factory orders. That came out better than expected, 3.2%. Off a minus 4.4, so big swing on that factory order figure. And then retail sales went the opposite direction. We saw a minus 2.7 figure from a positive 1.2. That's the worst figure that we've seen since pretty much the beginning of 2022. So pretty much a 1-year low there for retail sales over in Europe. But what we have for the rest of the day is minimal. And really, we start to turn our focus towards what else is going on this week. And certainly tomorrow in the early hours for people here in the UK, we have the RBA rate decision, a continuation of that central bank theme. We're expecting them to raise rates for what could be the final hike within this phase. Later on in the week, we see UK GDP too. So looking at the indices space, we've seen the FTSE 100 turning lower. That comes off the back of significant volatility last week. Now, bear in mind that as we see the decline in terms of cable, which has been playing out, you do see the likes of the FTSE 100 by and large sheltered from some of the potential losses that we could see otherwise. And certainly, I would say that that is no more evident than what we saw on Friday. Big gains here in the FTSE. That's not necessarily the case everywhere. I think a lot of that came down to the moves that we saw in terms of the US dollar against the pound. In terms of this daily time frame, what we can see here is this leg higher, the pullback retracement phase, the next leg higher, the pullback, and then this represents the next leg higher. We did break through resistance. Now, the question mark of whether this is a top for this market doesn't really come into play unless we break through this prior swing low, on this occasion at 77.07. Below that, we're looking at 76.90 as well. We have this cluster of prior peaks. And if we go on to the weekly time frame, we can see we also have that peak from back here at the beginning of 2020. So big area of support, prior resistance turned into support, 76.90 providing that key support level. And over the near term, yes, we're weakening. Is this going to really reject that trend that we have been seeing at the moment? We can see the sort of bottoming out here, the creation of high highs and high lows on the way up out of that pattern, and now we're returning towards the downside. Like I said, if we break through support, that's when we look like we've topped out. But until then, there's a good chance that this pullback could still find buyers, and that could potentially be driven by weakness in terms of cable, if that's how it plays out. Elsewhere, in terms of Germany, this is how we're seeing things at the moment. We're seeing a move lower. We can also see that happened on Friday. Pretty much that entirety of Friday saw us moving towards the downside. That's not something that we saw off the FTSE 100. Daily time frame, we can see again a similar kind of story to the FTSE 100, in that we saw a recent period of consolidation, sort of bottoming here after a very shallow retracement. I mean, if you see that kind of rebound, you would expect to see something a little bit more decent, maybe something like this that we saw in December. We didn't. We saw pretty much one decent down day, and then we saw flatlining price action and a push into a new long-term high. Well, we're now reversing that course. We're turning lower from that area. Like I said previously with the FTSE, you know, if we break through the prior major swing low, on this occasion it's 149.03, that's when you look for a wider pullback to come into play. But at the moment, we're still just continuing on this theme that has been developed over the course of the past few weeks, and that is this creation of higher lows. We have 149.03, 149.64, and then tentatively above that 149.84. Let's just go over this one here to make it a bit clearer. And then we saw that strong push towards the upside. So as we pull back here, there is still a chance that we're essentially just retracing, whether that retracement comes into your sort of 151s, 152s, whether we're retracing the wider moves, which would point towards 150, 56, 150, 150. So there's this sort of zone of support that could hold. The 100 period SMA is around that area as well. But so near term weakness does seem likely. There is still a chance that we're just retracing and we're going to continue this wider theme. And only with a break through that 149.03 would I say with greater confidence that it looks like we've topped out on a sort of more meaningful manner and that we're going to see a more protracted move lower here for the DAX. And then finally, looking at the NASDAQ. The NASDAQ's an interesting one. Once again, we're going to look at the wider trend here. And we were looking recently at this bottom that we saw here, the double bottom formation with the break up through 122.58. I also brought on this Fibonacci drawing, and the reason for that is that when we saw this recent sell-off rebound, the next leg lower didn't actually create a leg lower. It didn't break the 104.33. So there's a chance that what we're seeing here is a sort of, let's get the retracement tool here. So we could be seeing a ABC style retracement, right? So it's just a three-legged pullback rather than just one single move and then the next leg lower. And so that's why, even though we broke through this double bottom neckline, we were looking at these fibs as potential areas where this market could roll over from 124.66. That was broken, so we can take that off on a 61.8. But above that, we have the 76.4 fib, which is 129.46. We have moved just below that level. We didn't tag it, but we've moved lower from there, and we look to be continuing that theme as we move into this week. The daily time frame shows you this sort of tweezer top formation with these long upper shadows, upper wicks, then giving way to a gap lower as we begin trade today, and we're heading in that direction. We do have the fact that on the 4-hour chart, much like much like the FTSE 100 and the DAX, we still have this intraday trend, the 4-hour chart showing us this creation of higher lows. Let's see if we have some sort of trend line support within this kind of sort of not really picking things up on the top end perfectly, but you know, it's there or thereabouts. So we have a sort of area of support here that also is going to line up generally with this Fibonacci zone of support. So as we move lower, you've got to look out for this 120.70, 122.30 kind of zone. That looks like an area where if this trend is to continue, then we could rebound once again. A breakthrough 118.16 certainly provides greater confidence that we have completely topped out and that this wider bearish trend is going to continue once again. Watch out for this wider long-term ascending trend line as well, because we have now seen that third point marked the bottom of this move. So we could see this as a bottom for the market. Perhaps, you know, the warning that we could see another interest rate rise, etc., you know, could lead to some downside. But I think there's a good chance that the bottom is in for this market. Yes, maybe we've got a little bit ahead of ourselves, but even if we saw a few weeks of downside, I don't necessarily know that we're going to break the 104.32. So we're reversing from the 76.4 fib. If we do see that breakdown through support on the 4-hour chart, the 118.16, then we're looking at that wider pullback to come into play. I think there's a good chance that this essentially forms an area of sort of consolidation almost, as we try and ascertain whether this is the time that people should be buying the dip. But near term, there is a risk that we could see this market roll over. Looking at the FX space, we have seen the US dollar really coming into prominence off the back of that payrolls release on Friday. That has led to speculation that we could see the likes of euro dollar, cable, Aussie dollar all roll over. And certainly that's how it's looking at the moment. The weekly time frame showing you last week. This has been a frustrating one for me, to say the least, because we did look at last week trade of the week. We were looking for a breakout through resistance. We essentially fell short of the take profit by a few points and then reversed sharply at the back end of last week. So this trend has been playing out very consistently. What we could say here is that we're looking for a wider retracement. So there is still a chance that what we're looking at here is a wider retracement of this move, the 104.83. But certainly I would say over the near term, the fact that we've broken down through this area of support points towards the potential for further downside from here. Like I said, be careful, because what we're seeing here, if we're looking at that intraday trend here, very consistent, then you see a breakdown through your first support. You could say, right, this market's completely topped out. Just look back at what's happened in the past. Okay, case in point, trending higher, high highs, high lows, roll over, then we're just retracing that wider move. On this occasion, we're seeing this trend, higher highs, higher lows, in particular those. We break down through support, then we're essentially retracing that wider move. So at the moment, we are breaking out of this trend, but there is still a good chance that we're, like I said, let's just expand this. There's a good chance that we're still retracing this move, and in which case, further downside over in the near term, yeah, sure, that's definitely a good possibility. 106.90s, 106.13, that kind of zone of support certainly provides the potential for this market to find some impetus towards the upside. Once again, a breakthrough 104.83 essentially negates that idea and points towards a wider pullback coming into play. But so I would say near term, looks like we're going to see further downside, but there still is something lingering in my head to say we've seen this before, and we do see these wider pullbacks, and so there is a chance that we find some support. So look at how we respect or don't respect those levels as a signal of where we go from here. Cable also looks pretty toppy. In particular on this one, we didn't necessarily break through resistance. 124.46 marks the peak that we managed to establish recently that failed to break through the prior high here in the middle of December. Now, if we're looking in terms of price action at the moment, big ramp up at the back end of last week for the bears after that Bank of England rate decision. 118.41 gives us that double top formation. So there's a possibility that we've topped out here also for cable. Let's look at the weekly time frame. Again, you can see this, the sort of significance of that neckline here. If we 118.41, if we break that level, then it looks like that bearish trajectory comes back on course once again following this recent rebound. Let's see how far we came in that. So about 50%, I would say. Nonetheless, so yeah, bit above 50%. Nonetheless, 118.41 is the key level to be looking out for. At the moment, we're pulling back. I think there's a good chance we do see further downside, and certainly looking at sort of short term, you could say, well, now that we've seen this very shallow retracement and now that we're breaking through support, taking shorts at this position because of the fact that we've seen such a shallow retracement. If we look at where we are at the moment, you could say, well, stops, I could put my stop about like 45, 50 points above where we are at the moment. And because of the steepness of this move, that was 235 points. So, you could quite easily be looking for a sort of one-to-one for the downside and trying to play things over the short term. The fact that we're breaking lower once again following such a shallow retracement, for me, points towards another leg lower from here. But certainly if we do break up through that recent swing high 120.70, then it points towards a wider retracement coming into play. But at the moment, that doesn't look like it's playing out. It looks like the bears are going to be in charge as things stand. And then I wanted to finally touch on the Australian dollar. Bear in mind, we've got the RBA rate decision overnight. We're reversing lower. This is something that I brought up not so long ago, with the fact that we rallied into this 100-week SMA alongside that 71.37 resistance mark. Now, this is the kind of point where we could see this market reverse. Certainly, we're not creating lower highs anymore, but nonetheless, it's a big area of resistance. And now last week, bearish engulfing candlestick formation completed, stochastics breaking out of overbought territory, which let's see how this played out in the past. So on this occasion, great selling signal again here, another strong week of downside off the back of that. This was again marked the top here, over here, This was more of a sort of consolidation phase because it was coming within an uptrend. And then once again, here marked an absolutely brilliant selling opportunity. So by and large, on the past 1, 2, 3, 4, 5 occasions, this has given us very good sell signals. One less so, but by and large, we still saw a bit of downside. On this occasion, I think there's a good chance that we do see this market rolling over from here and reversing that bearish engulfing pattern, signaling the potential for further downside from here. And look at this, we've got 68.72 over the near term as your support level to watch out for. So watch out for that key level, 68.72. If we break that, then we're no longer creating this pattern here, and we're looking for this market to roll over in a more meaningful manner. It looks likely, and much like cable, we've seen a shallow retracement in comparison to the leg lower, and now we're heading lower once again. So I'd be surprised to see this market suddenly come in for a load of buying. I think there's a good chance that we do see further downside playing out as we see this market roll over. Looking at the commodities space, last week was really dominated, certainly at the back end, by US dollar strength. That doesn't necessarily play too well for gold. And certainly if we're seeing an outlook from central banks like the Federal Reserve that could point towards higher rates for longer, and certainly that jobs number played into that theme, then that's not necessarily what the gold bulls want to hear, because gold is expected to do well at times, in particular when interest rates are being cut. The monthly time frame shows you that. These blocks here are periods where we saw interest rates being cut. So those are sort of monetary loosening phases. And you can see here, this comes off the back of a period, multi-year period of consolidation. And that's when we started the bull market. This was within a bull market, but sort of continued that move and certainly saw a very strong sort of 6 months there in the middle of that in particular. And then the more recent move came off the back of an extended multi-year period of consolidation and marked the beginning of the next leg higher. Well, now we're sort of seeing interest rates high, so we're seeing a different outlook. But we pretty much know that we're going to see interest rates cut, whether it's this year, whether it's next year. We at least know that it's going to happen, and therefore we're seeing markets front run it a bit. We've seen 3 months of gains. I think that we will see plenty of gains down the line, but certainly stories about the potential for higher interest rates and that period to potentially be longer, that's not necessarily going to benefit this market. And that's why we saw a big sell-off at the back end of last year. We're trying to stabilize ourselves once again here. Look, for me, I think that, downside over the near term isn't necessarily a bad thing. And certainly from an investor standpoint, I think gold stocks are particularly attractive because of that longer term outlook. And therefore, potential weakness over the near term in terms of gold prices might not necessarily be an awful thing if you're taking that longer term view. In terms of the way that this market's playing out, the 4-hour chart, we can see much like how some of the FX markets are playing out, big declines at the back end of last week. We're seeing a tentative rebound, and now we're already starting to see this selling off. So certainly a breakthrough 1861 would point towards this market rolling over once again and seeing another leg lower. The breakdown through 1897 and 1867, 68 really ends this very consistent uptrend that's been playing out and points towards some of the heat getting taken out of this market. So certainly look out for 1861. A breakdown through that level points towards another leg lower here for gold. And then looking at Brent crude, this is something that's been playing out very well because we were looking for this market to roll over from trendline resistance. Well, it really ramped up last week, that 100-day SMA and that descending trend line, ultimately seeing this market head lower. We were talking about this, that you could construe this as a double bottom formation and say, well, this is a great buy signal. But you've got to look at this. This ultimately took us back in towards an area of resistance. And if you look at this sort of this double bottom, this break through the prior high, but move into trendline resistance, it looks very similar to what we've seen here. And we saw that leg lower. Now on this occasion, we're seeing a leg lower, but you can see we haven't broken through support quite yet. 77.65, trying to see a little bit of strength coming into play here at the moment. The 4-hour chart does show you we saw that very sharp move lower, and now we're starting to regain ground. And because of the fact that we've got such a strong move lower, it's a good chance that this rebound could be quite decent in size. But unless we break the 84.16 mark, there's a good chance that that near-term pop could be relatively short-term in nature before we see this market roll over once again. Like I said, 84.16 is required to then build a more positive outlook, but even then, up ahead, you're coming back into trendline resistance once again for Brent crude. That's it for today. If you want any more news and analysis, make sure to go onto the IG platform. Other than that, follow me on Twitter. My name is Josh Maroney here at IG. Have a great day and good luck trading. Thank you.